motion to approve agenda or amend? Moved, seconded. Right. We got the agenda. Public comment period. Okay, then we'll move on to the next piece of the minutes from March 11th. For eligible to vote on this, read the minutes. Yep, all in favor?
Aye.
Okay, second. Favor say aye. Okay. Yeah. Okay. Let's see, presentation of the annual comprehensive financial report and.
Great.
Go ahead.
I'll kick it off. Good evening. I think we clearly have a fun group here tonight about our ACFR and our audit results for fiscal year 2025. I'll start with just in front of you, you have an updated version of the ACFR, and that is the result of comments from the Finance and Audit Committee. Staff's appreciative of the time the Finance and Audit Committee has taken to review the management discussion and analysis. That's in front of you. And then additionally, there's a number of documents that come out from the auditor. And so there is one document that was in the electronic version of the board package that wasn't included in your hard copy version of the package. And so that's included in front of you tonight. It's also folded into one of the other documents, so we didn't totally miss it, but just wanted to make sure as we talk through the audit tonight, you have that in front of you. Before we transition into the presentation, looking at our fiscal year and the results of the audit, I wanted to start with staff and the auditor introductions, as well as our support consultant. So you're familiar with Mr. Dubé, so we'll skip over him for the moment, but Mr. Moore, could you introduce yourself and your role?
Jason Moore. Good afternoon, board. I'm sorry. Jason Moore. I am the controller here.
Mr. Tomlinson.
Brad Tomlinson, and I'm a manager with YHB, the external auditors.
Mr. Wolf.
I'm Jeff Wolf. I'm a partner with Forbes Mazars, and I'm a consultant assisting with the audit and the effort.
And
I'm Shawnette Hurley, and I'm the senior accountant.
And I'm Barbara Reeve, and I am the accounting secretary.
thank you.
Welcome.
So we're starting this evening with the presentation of the fiscal year ACFR, the annual comprehensive financial report, and the audit results. Mr. Moore is going to walk us through an overview of the ACFR, and then and really the focus of the presentation, and then we'll transition into Mr. Tomlinson will kind of walk through, as he did last year, the pieces of the audit or the reports that come out of the auditors. So I'll let you get started.
Jason Moore. I am the controller here at AlexRenew. Before I get started, I'd like to acknowledge my team. I'd like to start with Mr. Akube, who is the director of finance. Just a shout out and a highlight on that to account again, and Valerie, who is the accountant's addition. I'd also like to acknowledge Brad Tomlinson from YSB, as well as Jeff from Techland. So the 2025 annual comprehensive financial report in the ACFR is broken down into 3 sections. In the first section, you'll find what the MD&A is. The second section, which is the financial section, you'll find basic financial statements as well as supplementary information. And the third is the statistical part, where you'll find financial trends over the last 10 years. The ACFR is required to be audited by an independent auditor, that would be Brad Tomlinson and YHB. Here we have the summary of fiscal year 2025 expenses and revenues. This is a snapshot of how we did in 2025. To highlight, we had total expense of $183.4 million. In that, we have capital outlay, which attributes to $120.2 million. Debt service, which is $21.4 million. Operating expense is 36.8 million. And as you'll notice, we had an addition to cash reserves here at 4.9 million. Opposite of that in the
We
revenue,
should
we
point
had,
out this is a revised chart from what was in your package, and that relates to the very last item that was just mentioned, and that is the cash reserve. So that's pulled out as a item to make sure that people, when they look at the summary, see.
the revenues, we had general capital proceeds, 84 million. Fairfax capital contributions attributed for 23.6 million. And operating revenues, which was 75.6 million. Here we have more of a detailed picture of how our expenses are attributed by county. Take a look at this. This is all of our expenses minus the 4.9 million.
They say that this is in counties, this is the flow of funds, right?
That'll be the next slide.
Physics.
This is the picturesque.
Picturesque.
The flow of funds and the flow of other things.
Some pictures to go along with the expenses.
Yeah.
Now, here we have, we have the flow of funds fiscal year 2025 consolidated financial results. This is the flow of funds according to our master of indenture and financial policy. I would just like to highlight a couple things on here. Start with the total operating revenue. As we see, 75.7 million here in the first section. Of that 75.7 million, operating expense is 36.8 million. And if you go down to the next section, here at debt service, you can see 21.2 million attributes to the transfer from operating fund. And at the bottom there, transfer from operating fund for capital is 17.8 million. And just to note, again, as you can see, in the net change in cash, the 4.9 million is outlined as well. Here are our financial compliance summary. It identifies two of our main financial metrics here, AlexRenew. First, the debt service coverage. We budgeted 1.7 times coverage, but surpassed that with a coverage of 1.9. On the opposite side there, we have the total days on cash, and our key target for minimum days on cash is 270, but we also exceeded that with 792 days. Included in that number is the 4.9 million reserve surplus that we observed in FY25. In summary, our fiscal year 25 audit outcomes. We have received a clean, unmodified opinion for our financial audit, and we anticipate an unmodified opinion for the single audit report, which is delayed due to the government shutdown. Auditor's recommendations and suggestions for consideration are to enhance the prepaid expense review process to consistency and to ensure consistency and accuracy in future periods, which we currently do by assessing these on a monthly basis. The second is to continue to update policies to incorporate guidance related to recent standards, such as those issued by GASB, which we also do on a yearly basis as well. That being my conclusion of my presentation, I'd like to introduce Mr. Brad Tomlinson to talk more about the detailed audit results.
For that, are there any questions for Mr. Moore?
Thank you, Jason. Appreciate the opportunity to be here for you all as where we really appreciate Blake's help, Jason's help, and Jeff to make the audit a very smooth and successful audit. Like Jason mentioned, it was successful, did not have any issues throughout the process. We were able to work through things with management to get through the audit efficiently. We have a clean opinion, which is always the goal. So I'm sure you have the packet of information. There's quite a few various documents there. kind of the most important one is the independent auditor's report. This is going to be our opinion over the financial statements as a whole, over the ACFR, kind of just providing high level of assurance that we can provide their clean financial statements. So the unmodified opinion is the highest level that we can provide. A lot of the information here is pretty standard, so we'll kind of cover the items that are specific for 2025. The first of which you will see on the page, there is a reference to a change in accounting principle, just noting that GAAP statement 101 was implemented correctly and the GAAP standard by AlexRenew. That standard just added additional accrual information to the PTO liabilities. Looking on to the second page, the opinion really kind of lays out our responsibilities related to the audit. It also lays out information about the required supplemental information, which is included in the annual financial report, but it's not subjected to the full audit procedure. So it just kind of notes there that information is included in the report, but it's not subject to the full audit. As Jason also mentioned, there's an other matter paragraph on page 3, which does note that generally provide in the audit report here in the meeting as well. It was the federal government's been behind on kind of getting that compliance supplement, which is the governing document for the compliance audits related to federal awards. They've been delayed in getting that that guidance issued, and so just kind of across the industry for these compliance audits, we're kind of on pause, not able to fully. We've performed as much work on that as we can, and hope to do it. So nothing to note of concern, and we'll be able to issue that as quickly as possible once the federal government releases that documentation.
There's kind of two potential reasons. Maybe they snowballed into the reason for the federal government's delay. Is it the fact that there are fewer staff, whether it's OMB or EPA, to do this, or was it the shutdown?
It's probably primarily it was kind of driven. Normally they like to issue it around May, June, so they were already behind. Probably like you mentioned, OMB, it comes through them. A little bit shorter staff, probably also maybe looking at things in the past that they hadn't looked at due to the change in administration, so that delayed it. Then they were hoping maybe October shutdown hits, so it's been a snowball. Unfortunately, they issued a draft of what they anticipate the final guidance to look like, so we performed the testing in accordance with those procedures. Hopefully no changes between their draft and their final, and then we'll be able to kind of complete everything and issue pretty quickly.
Was there any material changes in the
No, not related to your program, there were nothing significant that we kind of looked at this year that we had in the past. It was pretty standard. Usually their changes are not too significant. So the delay is a little bit out of ordinary, but opinion that's listed is this document here. So it's the independent auditor report. This is the opinion that is related to government auditing standards. Now, this opinion would note any significant deficiencies or material weaknesses in internal controls, also any compliance findings that we had noted. And it's also a clean, unmodified. That information is again highest kind of level of assurance that we can provide on the GAAP government auditing standard side of things.
Chairman. A question about the internal controls audit. I understand it's not a comprehensive internal controls audit, right? But could you expand a little bit on the techniques you use to reach the conclusion you did?
So specifically to the government auditing standards audit, it's performed in accordance with the Yellow Book audit standards, which are issued by the financial by the government. So we perform specific procedures tailored directly towards the compliance risks of your organization. So they vary from client to client. So we also have to perform additional procedures on internal controls related to those standards. So there's kind of a separate section of our audit specifically dedicated to that, largely around control structures and things of that nature. That if anything did rise to the level of being a significant deficiency or a material weakness in internal controls, oftentimes they would be included here. So not something that we came up with this year for your organization. But if there are material weaknesses or significant deficiencies in internal controls, things of that nature, they would be referenced here.
Could you go into a little more detail and specificity? What did you look at?
There specifically for Virginia as well, there's a whole list of compliance requirements from the Auditor of Public Accounts. So various things. Obviously, we're looking at control structure as a whole related to financial statements. So, for example, if something isn't properly reconciled and it's affecting the financial statements, and we uncovered that related to our financial statement audit, it also could be flagged here as a government auditing standard of finding. So that plays into it, along with the APA, the Auditor of Public Accounts testing requirements. So they have a report that they issue here specifically for authorities, boards, and commissions in the Commonwealth. And so each of those steps that are applicable, it covers a wide variety of things related to investment policy, relating to debt, just really kind of covers quite a bit of various items that they're specifically concerned with. So it's a fairly lengthy list of specific requirements. And then there's also be a separate opinion under government auditing standards related to a single audit, since that's also federal funding, and that will be tailored specifically to the federal programs that are selected for testing. So it's largely looking at internal control structures as a whole. We perform walkthroughs of significant internal control processes. So once the compliance audit is kind of wrapped up, that's obviously tailored very heavily towards the funding related to AlexRenew recently. So the various internal approval processes and purchasing, procurement processes related to those funds are scrutinized during that process. And then making sure that the expenditures that are recorded in the records obviously are sufficiently backed up, and with actual hard copy invoices, purchases, agreements, things of that nature.
So you look primarily at process and procedure, not so much at individual transactions. Are there a couple transactions you did look at?
So the single audit is very heavily focused on transactions. That one is very heavily focused on the detailed testing of transactions that were reported on these programs. This overarching government auditing standards is, I would say, a little bit, it's not as focused specifically on one set of transactions. It's trying to kind of incorporate potential issues across the organization as best we can, form the audit up to the standards. So it's trying to get as good of a picture as possible of the control structure of the whole.
Okay.
As drilled in at one specific.
Mr. Hill, to add what Mr. Thomason was saying regarding your question about testing internal control, they do perform very specific tasks. One of them being point of entry, separating a transaction from who approves it. Another one is looking at an invoice approved for payment, who approves it versus who payment is. Just some of those testing that they do look at. They look at that as well as many other things that we have in accordance to our policies, such as who's authorized to sign this checks, who's signing checks over a certain threshold amount over. If that.
That's very, very, very helpful. Thank both of you. Very good answers. I fret over internal controls. We do a lot of transactions, right? So high value transactions. Thank you.
Any other questions on the document so far?
Any questions? Thank you very much. We appreciate it.
I've had a couple more. I wanted to get
Holding our breath.
you want to kick it out. I mean,
Keep going.
the next document is the allocation of current expenses related to various expenses with Fairfax. Again, another clean opinion. Management prepares this allocation annually, and we audited the audit. So the schedule that's here on page 3 is kind of going to take the total expenses and then break them out totally attributable to AlexRenew, what's a shared expense. The bottom of the schedule shows the total payments received from Fairfax during the year and reconciles to a balance due from Fairfax to AlexRenew, approximately $1.3 million. This amount has been included for already, so this is kind of just the underlying detailed schedule that is audited of the overall engagement.
The Fairfax amounts listed as receivable.
The next document we have here is another independent audit report specifically for U.S. Bank bond transactions. Just noting that as part of our audit, we have not discovered any non-compliant with various bond agreements. Another independent accountant report. This one is addressed to the Auditor of Public Accounts, which kind of oversees the local government audits here in Virginia. This one is related to the Virginia retirement system. So part of our data submitted by AlexRenew to the Virginia retirement system to ensure that the underlying details are accurate. As part of that, no issues were discovered. The second page of that just kind of provides information on the population and the sample size of that procedure. Any questions on those documents so far before we get into the next topic? Next one is this document here called the report of audit results. This is going to cover our required communications that we provide to you at the end of each audit. It's a lot of information here is pretty standard language, so we'll kind of focus on the areas that are new for 2025 or specific to this year end. First page here, it does note here that there were 2 new accounting standards that were applicable for the year. GAAPI Statement 101, as we discussed, with related to complicated absences, so that was implemented for the organization. GASB Statement 102 was also applicable, however, it did not have an impact on the financial statement, but it was across. On that page as well, there were no unusual transactions or no significant accounting policies that were controversial or anything of that nature. Looking forward, there's a section here about accounting judgments and estimates. So as is the case with any financial statement creation process, there are estimates that do process. So as part of the audit, we look at the significant estimates, and then we perform procedures to ensure that we are in agreement with management that the estimates are reasonable. So these estimates are consistent with the prior year. So no significant changes there, but they are noted. The next section, kind of after the estimates, does reference audit adjustments, journal entries that were made during the audit, which are attached. So we'll flip to those second to see those. There is an item noted for uncorrected misstatements this year, and this was essentially just related to the lease that AlexRenew has related to the one of the units here in this building, this lease to the city of Alexandria. So the management has kind of elected just to treat this more on a cash basis, where the funds are received and then used directly for the LEAP program. So rather than reporting it under GASB statement number 87, which is related to leases, it's kind of just shown as cash in and cash out. So it offsets on your profit and loss. This is just noting that ideally it would be recorded as a lease receivable, and then a corresponding deferred amount of approximately $200,000 on the balance sheet. Overall, it's not a largely significant amount, so it's not required to be adjusted, but it's just kind of noted here as a accounting kind of policy for the year. Any questions on that? Next page here is just showing the various paragraphs that are included in the auditor's opinion, which we kind of already mentioned. Supplemental information is included in the ACFR, but it is not audited. It is reviewed by us, but not fully audited. And the other matter paragraph was discussed related to the audit related to the federal government. Following page really has quite a bit of just the standard information. There were no disagreements with management. There were no significant issues or no significant difficulties. Bottom of that page kind of goes into some independence disclosures, just relating our procedures that we do to ensure independence. Following page goes over the procedures that we just request you all as the board and management also use to ensure that we remain independent. And then the bottom of that next page does reference internal control matters and other communications, which we will get to here in a second. Following a couple of pages, you'll see quite a bit of lines just related to journal entries. So these were entries that were provided by management to us during the audit process. Just pension, fixed assets. So those are just routine adjustments. But that information. The kind of final piece that we have is the management letter. So this letter here. As part of the audit, we do look at internal controls. The audit is not designed to detect all internal control deficiencies, but if we do detect anything of note, we report that to you. So there are several different kind of levels of severity of comments that we could have. The most severe would be a material weakness. Kind of one below that would be a significant deficiency. We do not have any that rose to that level, so nothing that came to that level of severity. So the comments that we do have are more as suggestions or recommendations, things of that nature that don't rise to that level of severity. As Jason already touched on, the first comment is related to prepaid expenses. So just during our testing, we did come across a couple of invoices that were reported as 2025 expenses that technically should have been spread across partially 2025 and partially 2026, just related to the period on the invoice. Overall, they were not significant numbers, but just a recommendation to maybe kind of track those a little bit, improve the track the process a little bit during the year. Then the second comment, which Jason also touched on, is just related to the financial policies. So we believe that the financial policies are strong, that the organization has in place. Just a point to maybe consider is maybe adding in some of the newer GASB, the Governmental Accounting Standards Board, accounting standards just into the policies so that management kind of has a good, something hard copy of a track of how to handle those situations should they arise. But overall, that's just a best practice recommendation for your consideration. So any questions on those documents there?
Mr. Chairman. I've got to drill down a little bit on prepaid expenses. Walk through that finding with a little more detail. What are we really talking about?
So I believe it was, and Lake or Jason, feel free to jump in or add to the comment. During our testing of transactions specifically focused at year end, there were a couple of invoices which would be, for example, maybe an annual subscription.
Okay.
X dollar amount, it wasn't not largely significant. That technically should have maybe been spread of 4 months, 2025, and then 8 months in 2026, rather than all being were in 2025. So those were the kind of that was the nature of the comments.
Every dollar amount matters, but were these big dollar amounts or?
No, they were not, because it would be it was not significant enough that it required. Okay. But it was something just point out that way. The significant transactions, I believe they were on top of, but just in case, just a recommendation of maybe looking at it during the year a little bit.
Just to jump in, just to give you a picture, there were 2 invoices, I believe one was monthly, and I believe they were paid in FY 26, and the amount that would have been accrued in FY 25 was collectively under $1,000.
Okay, so.
Yeah,
Nice answer. Thank you very much.
It was as part of our procedures, we kind of perform sampling procedures, and so we put them into our form. So like Jason mentioned, small balances, just something to kind of keep track on.
And we look at those, we follow this process, as Mr. Thomason said, if this was significant. At FY 25, we will move it for like little amounts like that. Sometimes we just let it, I just guess it's insignificant.
Subscription isn't worth
Exactly.
dividing out by the night, something that's paying for 4 months of IT services.
Yes, now we're talking about.
Not a huge
$25,000
construction
a month.
expense, yeah.
That's a different story.
Yeah, okay. Thank you. Great clarity. Appreciate it.
Any other questions, comments? Thank you very much.
Appreciate the opportunity to be here. We thank you for the opportunity to work with you all again this year. Again, thank you to the team. You did a great job. We appreciate it.
And we appreciate your having this. We had a schedule when we started out, and we met the schedule and schedule well. So appreciate that very much. And so will the auditor of public accounts. Report before the end of the month.
Next and last item on the agenda is a presentation.
Before you move there, I believe we need a motion from the committee to move the ACFR forward and related documents forward for consideration for acceptance by the board. Move, seconded, all in favor? Aye. Okay, good. Proceed. Okay.
Thank you. Okay, so obviously the primary focus of tonight's Finance and Audit Committee meeting is to focus on ACFR and audit. But as over the last year, this meeting last year, and then this year, we're also trying to be cognizant that we're kicking off internally our budget process for fiscal year 27. And so wanted to just kind of get the board geared up for an exciting 2026 where we go through fiscal year 27's budget process with you all. And so this presentation, Mr. Akingube is going to run through, really focuses on kind of what are the upcoming initiatives, where's our focus as an organization, and then builds off of Mr. Moore's presentation where we did finish the year with some additional funds going into our cash reserves. And so looking at what we could potentially do with additional money that comes in terms of our rates, and just kind of getting the Finance and Audit Committee thinking about potential options or opportunities there with additional cash. So I'll do that. It is, it's fun.
Give me a hard time about it.
Thank you, Ms. Vian. Again, good evening, Finance and Audit Chair, board chair, members of the board. You know, all I've been on here, I'm super excited today. Thank you, Mr. Collins. That being said, as Ms. Vian alluded to, this is the FY 27 budget preview, more from a high level standpoint, just to feed the board of what to expect, what's to come. We will come back to the board sometime around March when we have a full draft to present to the board. This slide right here represents the 8 main cycles of the annual budget here at AlexRenew. The first 4, which includes setting up the budget goals, preliminary budget forecast, running those forecasts into our financial model to see how well they line up with existing rates and projected rates. Those first 4 cycles are much more internal, where we talk with departments, our rate consultants, Mr. Carl, like for lack of better terms, like a bill you pass in Congress, not to negotiate, but go back and forth just to make sure that number support what we have in our rate model or what we need to put into our rate model. The next 4 cycles, which includes once Mr. Carl blesses a draft of the budget. Now we have a preliminary draft budget we could present to the board. Also with the board asking questions, feedback about those numbers. We now have a draft budget which the board approves for public hearing. We present these numbers and this budget again to the public for comments and feedback. And at which point where the board comes back and adopt that budget for the following year. So the first 4 cycles, just to give it some time frame, usually starts around September and runs through around February, while the last 4 cycles, 5 through 8, runs from March through June. So again, looking at the FY 27 budget schedule, today, as I alluded to earlier, it's more like a high level highlight of the budget preview of what's to come. And we'll go through that. We will come back in March with a full preliminary draft budget to present with the board, March 3rd precisely. Exactly 2 weeks after that, we come back, present that to the board for the board to consider on the April board meeting, April 14th precisely, to approve that budget, that draft budget for public hearing on May 16th. Can't get my months together. May 16th, we present, that is our public hearing where we present our budget numbers to the public for comments, for any feedback. And we come back the next month on June 16th for the board to approve and adopt the budget for FY 2027. Questions so far?
I think one thing that in the prep meeting, we received a comment from Mr. Jinks and added to this slide is just a acknowledgement that this process for this year's budget includes the proposed rate structure change. And then we're kind of making it a little, we're saying rate recommendation, it's a little more vague in case there is kind of a different approach to our adopted rate structure for the year. And so that would go through this process as well as the fiscal year 27 operating and capital budget.
In regards to, maybe it's a good point, time to bring it up, the timeline, given the rate structure change discussion and potential, of high degree potential that'll be budget rate process, has thought been given to doing anything different as far as community engagement, as far as public outreach, so that in effect,
Yes.
something which could be significantly different is kind of people have an opportunity to weigh in early, so get to bills going out, we don't get as many people. We'll get some for sure. Many people going, you know, what is this? Why is my bill changed?
We, the board packet that went out yesterday, we have a detailed, not quite detailed, but a draft communications plan in there with messaging. And then when we want to start outreach, starting as early as December with talking points and informational flyers. For the small amount of customers that are impacted with a rate increase as a result of the change to a volumetric base charge. It's a new terminology we came up with. We're not using the word ERU anymore, but we're getting ahead of ourselves a little bit. What we were thinking about doing is two things. One, holding a series of mini public hearings where we could talk about the impacts to the base charge, targeted meetings with the Alexander Hotel Association, also meetings with ARHA. We are going through a detailed analysis right now to find out exactly what units are going to be impacted with a rate increase, and then doing direct outreach to them around LEAP. And then the last thing we're going to do is on the bill the goal would be between January and July, is on the bill actually show the commercial customers what their new base charge will be, and if it's a delta from their existing base charge, how we can help as an organization. So those are some of the ideas that we've been bubbling up. Some of those, actually, most of those are already reflected in the deck for Tuesday. So we've got a very preliminary communications plan together that we want to flesh out again with the board on Tuesday, and then fully in December, we'll bring some additional materials to the board meeting to discuss.
Volumetric base charge.
Hey,
That's,
we didn't want to say ERU.
Sounds like an oxymoron.
well, there's a little of that, but it's certainly better than ERU. Yeah.
So we completely got to, if you got a sneak peek at the deck for Tuesday, we moved away from the word ERU, given the concerns around the confusion with the stormwater fee.
Yeah.
And, you know, our rate consultants, they're like engineers, so they can't come up with anything creative. They, you know, just do EDU. And we're like, what are REU?
Anything's better than the old Chesapeake Bay fee.
Yeah.
That confused everybody.
When in getting ready for Tuesday, looking through the deck, I think you all have it now tonight as well, hard copy. But
yeah,
you know, it's all draft. It's for feedback. It's really, you know, to get the discussion going. The messaging is probably going to change, but it's food for thought to be able to prepare us for what Mr. Jinks just mentioned and getting ready for some significant outreach for the rate structure change, if we elect to do it this year.
We'll talk about it then Tuesday. Good.
The rate consultants are turning the wheels right now on 1,005 accounts to, you know, get us a list together for all of the multifamilies, and then we're going to run out from the city to find out if any of those are affordable housing outside of our. So something won't be done for Tuesday. Yeah, it might be.
Okay.
See, aren't we glad we had that phone call?
You're right. You're always right.
Okay. All right. So here's just a high level, fiscal year 2027 budget preview. Please note, these are just preliminary estimate. These numbers are subjected to change as we are still in the process right now to put together the FY 27 preliminary. This slide here talks about operating budget, debt service budget, capital budget, and rates for FY 27. Operating budget highlights so far includes 3 additional FTE for a safety coordinator, a maintenance lubricant analyst, and a maintenance vibration analyst. Also within the personnel cost is the continued operator apprentice program. We are currently also ongoing a compensation study at the moment, which will conclude sometime around February 2026, depending on the outcome of that study. Any outcome or additional cost from that comp study will have a full year impact for FY 27 and maybe about 4 to 6 months for FY 26, if there are any. Questions so far? All right. Debt service budget, again, these are primarily on existing debt.
Mr. Akinkube, Mr. Jinks, I think you asked a question at the prep meeting about the reason we're doing an apprentice program is we do have some positions that are open due to retirement. We're already doing a maintenance program that we started last year, we talked about, but the new apprentice program, we're focusing now on the operations side, so they're off by a year. We had noticed that the market for operators that are classified in Virginia has kind of dried up, so we're having a hard time finding operators with experience. So we figured, we've done well here growing our own. So we opened up an apprentice program. I think there's a concern, are they not attracted to our organization? But with the apprentice program, which is a high school GED, we had 200 applicants, which is a record for the organization in the program. We found this out after the meeting. I think we had 10 referrals internally for the apprentice program too. And that's, it's going to hit the budget as 6 positions with the hope that we end up having 4 make it through the entire program.
Great.
So, right about that too. Thanks.
I had somebody
So-
ask me about the position on the street.
Really?
Hey, you're on that board, right? Yeah, so I think, somehow I caught people's attention.
The debt service budget includes existing debt. Currently, right now, I do not anticipate on any new debt. However, we do have the repayment of the principal portion of our FIA loan. We started paying the interest this year, but no principal, but the principal payment starts in FY 2027. Capital budget, again, its numbers are based on the FY 26 CIP. We're still working on the FY 27 CIP numbers as we speak. Includes 17 million in AlexRenew spending, about 96 million on the face forward spending, and about 77 million in Fairfax contribution, money we are going to receive from Fairfax to fund our joint CIP project. Rates, as Ms. Bien alluded to earlier, or Mr. Carl alluded to, we have rate adjustment in FY 27 already adopted by the board in June 2025 to 5.7 to support AlexRenew. And as Mr. Carl alluded to earlier, again, a change to how base charge is being assessed. So looking at our FY 27 major capital investment, very similar in a way to FY 26. One thing we are going to see in FY 27, well, let me take a step back. Prior to FY 26, we saw how AlexRenew accounted for most of the capital spending. But starting in FY 27, we start to see the Phase Forward project account for a significant portion of our capital spending. So again, this capital investment were the same as last year, which includes the phase forward project of biosolids, the headworks, process optimization, as well as nutrient reduction. We are closing, getting to the final completion of the River Renew Tunnel project. And we have our improvement, renewal, and replacement program ongoing as well annually. Next slide. Here again is just to show, slide that just shows the FY 2026 10-year capital program. We're currently working through the FY 2027 10-year capital improvement program. And this slide again, I believe the board is very familiar with it. This is the AlexRenew projected debt service. Please, this chart here includes not only existing debt that we have, but also anticipated future debt that we will be incurring in years to come to fund our capital project. It's important to note that these are subject to change depending on new capital estimates, any regulatory events that we might have coming, debt services structure, and things of that nature. Questions so far?
Mr. Jakes, this is an update from the version that you saw. This is,
Staircase.
yeah, staircase, and a little more wrapping. This, we worked with our financial advisor just to kind of get to, I mean, obviously, it's all contingent upon how we structure future debt, but it's just one option how we could do that in the future.
Good, thank you. Good. Session. It was new debt. Here it is, kind of, and it would have a bigger rate impact of the early years than if we just got to phase in how much principal gets repaid. We don't have to make that decision now, but it's logical that we want to phase in rate increases rather than jump there all at once and then go low later on. So this kind of gets closer to that, and when we get closer to that time period, then we can figure out what works. Good, thank you.
Not that any of us will be around in 2055, but what's going on there the last 2 years? The future,
So
River Renew debt falls off, everything falls off except the future debt.
correct. So our existing debt that we have right now, which includes the BRA, the Clean Water Loan, we feel are projected to end by the end of 2055. Any new debt that we have going forward, that's why you see what's going on.
We wrapped it in the back end.
Okay, we'll worry about that in the year 2055, I guess, but yeah.
You never know, Mr. Hill, they have some appeals right now.
Make sure you leave a note. Make sure you leave a note for your grandchildren.
Maybe we'll get some grant funding.
John, I intend to.
I'll be 100 years old. Thank you. It was more just a chartmanship question. Yeah, thanks.
All right. So here's a chart right here that shows rate increases here at AlexRenew since fiscal year 2019, pretty much since inception of the River Renew project. Included in that in FY 27 is the already adopted rate increase of 5.7, primarily to support the River Renew project. And you can see the last 2 fiscal years of projected rate increases of 5% and 4.5, again, to support the ongoing phase forward project. Let me pause for a second. Is there a question I want to ask? All right. So here's our day's cash projection. Mr. Moore alluded to this earlier that as of FY 2025, that we ended up with 792 days. So pretty much you're looking at, if you look at fiscal year 2019 through 2025, especially within the last 3-4 years, we've averaged around the mid 700 to like the low 800 in like daily cash. That has been primarily driven just due to the delay in capital spending, capital execution. But as you could see, from 25 going forward to 2035, you could see how we're now drawing down on those days cash as capital spending picks up on the remaining River Renew project as well as the phase forward. Coming back to FY 2025, we ended up the year with 792 days. That is better than the S&P median number of 732 days. To quantify the difference in cash between 792 and 713, it's roughly about $8.2 million. Now, included in that $8.2 million is the 4.9 that Mr. Moore alluded to earlier in the FY 25 year-end numbers. So we looked at different ways of how does this impact us financially moving forward. Next slide, please. Before I go to the next slide, pause here, just any questions so far. Okay, so we looked at that not only where we are, where we ended up in FY 25 days cash, but also going forward. And we have 4 options here that we've analyzed. The first one being the current option, which is the thick blue line across, as you can see right there. And that leverages reserve to provide future financial coverage. We also analyzed 3 more options, one of them being a near-term option, that's to reduce rates to 3.6% from FY 27 through FY 29. And that is right here, option number 2, the purple number. And as you can see, that line over a 10-year period trends higher than the current projection, again, as we go further down the years. We looked at the midterm option, which is reducing rates to 3.6 again from FY 29 through FY 31. And that is the yellow looking option that we have there. And as you can see, that trend kind of like started out with current projection, dropped a little bit between FY 29 and 31, but picked back up where it surpasses where current base. And these are rate increases, by the way, projected rate increases. It surpasses our base rate of just smoothing out the rate increase over a period of time.
Is this without the impact of changing our rate structure?
Correct.
Correct.
Some people are going to see less and some people are going to see more in
Yes,
these
sir.
numbers, but on average, what is it?
While you're looking at these numbers, you'll see commercial customers with overall rate decreases completely, like, no rate increase. 2,500 will have a rate decrease going below 0. The residential customers, you would see blended here with our current rate adjustment, that dark blue line is around 3%. So they have an overall rate reduction, still a rate increase, but less than what we initially proposed. So you're looking at that as 3%. And then the largest rate increase with the phasing plan that we initially proposed for Tuesday is around 5.3% for the most impacted customers. So you would take 5.3 plus Lakes, 3.6 for an annual increase of 8.6%. That's kind of how the numbers have, with a 5-year phasing plan, we might elect to do more or less, but that's up for discussion on Tuesday. What we did and analyzed for the board meeting on Tuesday was a 5-year phasing plan. So 22,000 and change see a 3% adjustment with our current rate plan. So it'd be even less with options 2 or 3. And then the most impacted, you're looking at, around 8.3% or so, with the current plan. So whatever we would do would reduce those rate adjustments by whatever percentage you're seeing on these slides between the blue and the yellow and purple.
Any questions on that particular subject?
This is good. Very good.
The final option, where we looked at and analyzed it, also looking at possible like rate increase in FY 27. And that shoots up to about 10.3% the following year, primarily just to meet our financial coverage. Financial to meet our financial coverage and again sustain revenues we collect to fund our capital project. I know Mr. Hill.
No. Option 1 is, option 4 is the least attractive.
One thing I will point out, this was a fun exercise with our rate consultants who again are our engineers. They this pushed them a little outside their comfort zone. But
A little. I hope they called it a little.
more tense conversations, I think, on this than the rate structure conversation. But I think there's just, these are kind of, they're high level options. They're obviously based on the current information we have for our last year's CIP. Any of these options, there's iterations that happen to kind of play around with that.
Theoretical.
Yeah, so I told them, and I would say that out loud just to make sure that there's a caveat to this, but
I think we broke them when we brought this up and went through this.
Ms. Fian, you said it was a fun conversation. You got an interesting definition of fun.
it's just like, I mean, yeah, it's interesting to see what is a more tense conversation than kind of these.
Why would you do that?
That's the car that stays on the lot.
Well, it provides an alternative. You could say,
Yeah.
we didn't buy that. Why didn't you use it all at once? The answer is because it produces a very
Huge
negative
spike.
consequence for the subsequent year.
I think their point is that we finish out the year and we put the year-end numbers into the rate model, and that's how they model future rates. I think our point back is that we continue to show surpluses, and I think we're trying to be cognizant of the balance between this and kind of put something forth that the finance and audit can think about or collectively.
And to add to Ms. Fian's point, over the past 3 years, obviously, we've accumulated some good issues. What is that? Model, the way the model looks at it is look at the entire cash reserve as it is as of now and project that going forward. So it constantly put in any additional rate, any additional reserve that we have into consideration into any future rate increases. But we were able, like Ms. Fian said, push the rate consultants like, what if we didn't have those additional reserve over the past 3 years? What would that have been like? And it's not comfortable conversations for them at all.
So we're not going to ask the board to make a decision tonight, so you see the presentation on Tuesday, but keep this in the back pocket to understand there are other things we can do to minimize the perceived impact associated with the base charge change to those customers that have a bill increase. And again, that number is around 1,005.
So again, this is just looking at the 4 scenario we just mentioned, looking at the daily cash, current projection with the early chart rate area, and you could see with those other options, the impact of like the days cash, how they start to drop.
And it also assumes is the base case that we break even every single year versus having money left over, which is good financial management is always to have a little bit left on the revenue and the expense side. So it's a cushion.
But for 2 of the options, the days cap was flipped. So this chart here is the updated version. So it just helps you see that the gray is based on option one, the current.
And this slide here, again, focuses on the financial matrix that Mr. Moore was talking about. Coverage. As you can see, the big blue line across represents our target, our minimum target of 1.6. And then again, you could see all the alternative or scenarios that we have, the impact that line or stack within the financial policy. They dropped off a little bit towards the later year, but that could be fixed in the way we smooth out our debt or our expenses, over the last 3 years or whatnot. But the story is just to say we're accumulating more debt and again dropping our cash reserve as we go towards the tail end of the chart.
Good, thank you.
Questions, someone?
Any questions, further questions? No, thank you very much. Good for you. That concludes the discussion. We look forward to continuing it. And meetings ahead, and clearly Tuesday we'll talk about how we deal with the community interaction in regards to the rate instructions. Anything else? The motion to adjourn?
So move.
All in favor? See you Tuesday.
I want to thank the Finance and Audit Committee, and especially everybody who worked on all these audits. And, we're not just stewards of public health, we are stewards of public funds. And the seriousness and skill with which everybody approached this is really appreciated. Frankly, it's outstanding effort, too. Really good. Clean opinion, although we don't call it that anymore, it's a clean opinion.
Just to add, you guys do such a great job. If you don't have questions to ask, everything